What's going on, ladies and gentlemen? Welcome to this exclusive Skyton Academy live session. This is where sovereignty is going to meet innovation. Tonight, we're diving into one of the most urgent yet overlooked pillars in crypto mastery, tax compliance and regulation. With governments around the world moving fast to regulate crypto gains and extract revenue from digital asset holders like yourselves, the game is shifting. And the question is, if you will be impacted, it's when and how prepared are you? So today, that's going to be here with us, joining us live and direct is the CEO of BlockSentry, Mr. Desmoine DeLancey West. He's a global leader in crypto tax software. From Africa to the Americas, his team is rewriting the playbook on how crypto is taxed, audited, and reported. So whether you guys are a retail investor, CPA, entrepreneur, or simply just somebody here building long-term wealth through digital assets, tonight's talk is for you. All right. So without further ado, let's get started. All right. This is financial intelligence. Desmoins, how you feeling tonight?
I'm good. I'm good. Sam, how are you doing? Thanks for having me.
Yes, sir. Steve, what's going on, brother?
Listen, everything's good. So, just a connection point with how we initially met. We both share a mutual friend in Donnie, who's actually a student of the academy. So, guys, this is why I tell you, like, you just never know one who's in the community and who has access to who, right? So, and Donnie will tell you for years, I mean, years, I've been on Donnie about looking at the digital space, right? This was before it was even a conversation in anybody's household. Donnie's super sharp guy. I call him my institutional guy. And if you know anything about the institutional guys, it's hard to really bend them, right? Because they just have access beyond access beyond access. So when you're telling them that this is going to happen, that's going to happen, some of them are kind of like, I wasn't really taught that just yet. Not that he was a skeptic, it's just he didn't do the research himself. So fast forward to last year, he tells me about a mutual friend that he meets through work and the product that Desmoins had, and Donnie kind of gave me a little bit of insider information into it. And I always thought it was genius when I heard it because I'm like, that's a piece that we never really get to see or hear on our side because we just have to kind of follow the news cycle. We've been through several administrations in cryptocurrency, and we understand that you know, it, we don't know what's happening when it comes down to a lot of the reporting and what should we do, what shouldn't we do. Everything kind of seems voluntary at the moment. So I make the connection point. We have a great opening conversation. He shares some information about his, the company that he's building and all things he's doing, and it's an absolute no brainer. Um, if you guys know the way I talk about the continent of Africa or just emerging markets, I always say the third is going to be the first and the first will be the third. So you're watching a brother here positioning a company, not the way that you normally would do it. Now the world's a lot smaller with because of technology and communication and just access, right? We things are we can just do business anywhere abroad. So that's why tell you guys like, listen, we shouldn't put all our eggs in one basket. Right now, we're looking at the global changes, the geopolitical changes in America, and not only that, but abroad. So, if for not cryptocurrency and digital assets, I would never know what was happening in most places in the world because I've never really visited. But this is the one thing that the crypto space did do is when America wasn't really at the forefront of innovation, it forced us to look at countries like India back in 2016, China, the adoption in Russia, and then now we got what we have today with the first pro crypto administration, and all things that we said back then are coming to fruition now. But we didn't hold the crystal ball. We just followed the crypto money, and it was abroad. So I'm excited to just get a little bit of a backstory on this gentleman here and his company, and to share with you guys. And this is one of those decentralized products that I told you about, where we're going to come together as a collective to put investment behind whatever it is that we see out there. And this is the first crypto project that I've seen that I'm excited about. That's not like a traditional um, currency project, right? So go ahead, champ, open it up and let's get to know all things.
Oh, system muted me. Sorry, guys.
All right.
Sorry for the transition in that. But listen, guys, this is extremely important. I'm excited about this one. For those meeting you for the very first time, Desmoine DeLancey West, CEO of BlockSentry. Please give us a little bit of your background and tell us what led you into the crypto space.
Thank you. Thank you. So Desmond West, I'm originally from Augusta, Georgia. I went to undergrad at University of Tennessee and wound up going to business school at Chicago. So I'm a finance guy by trade. Started come working on Wall Street in 2002 at a boutique investment bank. And so my background is finance, and I kind of look at the world through the lens of an investor or an investment banker. So what really got me hooked on crypto, interested in crypto and blockchain, wasn't really Bitcoin or blockchain tech per se. It was the idea of democratizing capital markets. Like somebody told me about this thing of crypto and what it could do to democratize capital markets, and particularly the STO, security token offering. That was the hook that got me involved in this, right? And the thing at the time was, I worked for AIG Investments for a long time. It's now called PineBridge Investments. And so I was in the private equity funds group. So we were investing in private equity deals and private equity funds. And private equity doesn't look at a deal that expects to make less than a 2x multiple. Sometimes 3x or higher, but certainly 2x is a base case for a private equity deal. When meanwhile, my friends back in Georgia and wherever they live now, oh, I'm doing pretty great. My portfolio is up 10, 11%, which is good, right? But I'm like, they don't have access to the deals that I see because the minimums are $5 million, right? To get into Carlyle 8 or Blackstone 3 or all the brand name Berkshire, all the brand name private equity firms, they were doing, take private Burger King or Dunkin' Donuts or the Home Depot deals, like all those deals in the early 2000s, those were private equity deals, LBOs, right? And big merger deals. And the general public had no access to those until they went public on the IPO market. There's no access to private investments back then, right? And so when I heard this STO idea, the idea you can own a fractional ownership of the Empire State Building, right? For $5,000, you could own a stake in the Empire State Building and you could trade on the secondary market. That whole idea, I was all over it. Like, well, tell me more. I'm going to meetups around the city. I'm trying to learn what's going on, right? So anyway, answer your question. That was the hook that got me involved in this. It was the STO. It was not how much money I can make in flipping Bitcoin. That was not it at all. It was giving access to people with deals at smaller dollar amounts, particularly in our community, right? We don't have $5 million, most people, right? And so how can we sort of invest our money and get a nice return at entry points that we could afford? That's what I thought about STOs and what this technology could do.
Yeah, no, that's incredible. So I guess it's safe to say that's one of the things that inspired the creation of BlockSentry.
So we came to this space as an investor. Actually, I came to BlockSentry for as an investor as their banker. So being an investment banker and going to all these different meetups around the city, I'm talking Chicago Booth Angels, Keiretsu Forum, Landmark Angels, all these different angel investor groups all around New York City. They have a meetup every month, right? So you can go to these things and hear all these early stage pitches. I've heard all kinds of pitches over the years, right? And so because I was trafficking in this industry, the founders of BlockSentry heard about me, interested in the space. They needed capital raising services. So I actually came to BlockSentry as their investment banker, helped them raise a Series A funding back in 2018. So that's how I met them. The company itself was founded out of James Madison University, JMU, down in Virginia. They have this incubator essentially called the Gilliam Center for Entrepreneurship. And that's the group of donors and benefactors of the university that funded the start of BlockSentry from 3 JMU students who came out of that school who were looking to they were tax majors, accounting majors, and they were interested in crypto. So they thought a need to merge tax compliance with their interest in crypto, and the JMU incubator funded the start of this business that we later acquired.
Nice. So what personal or professional problem were you guys aiming to solve when building this?
Yes. And so, really interesting dynamic and how things evolve over time is fascinating. When you go to business school, you start all these case studies, right? And some people just get lucky, right time, right place. Some people have all this foresight, right? Here, I think it's a little bit of both. So, the idea behind this company and any crypto tax software company is to allow, in the first instance, the end user to file their taxes to for their crypto gains. Now you ask yourself, well, why would anybody want to voluntarily pay taxes? This is 2017. This is before anything that was mandatory, right? But when you
Right.
think about the U.S. tax system and the economy as a whole, there are many cash businesses where those business owners voluntarily file a tax return, a barber shop, any sort of cash business. Well, why do they do that, right? Well, you want a lease, you want a mortgage, you want a credit card. You have to prove your income, right? And so people do voluntarily file tax returns. And so the founders of this business thought that they were solving the problem of those voluntary filers who needed software to help them file taxes. And of course, sometimes you lose money too, right? And so you also want to have your losses offset your gains. And so there are many reasons why way before the current administration, even Biden administration, which I know we'll talk about, they were voluntarily filing their taxes, right? And so their solution they're trying to solve was, if I'm a crypto trader, need to prove my income or offset my losses. How do I do that? I need software to do that. And so that's what this was designed to solve.
That's awesome. So tell me this, for somebody that is completely unfamiliar with crypto tax tools, how would you explain what BlockSentry does in the simplest terms?
Okay. At our base use case, the software can tell somebody, an end user or client, what the gains were on trading crypto, right? They'll figure out what you sold the crypto for, subtract what you paid for it. That is your gain or your loss if your cost is higher than your proceeds, right? So that's what the software does. It tells the user what the capital gains are on that sale. Now, that's in the first instance. I would add that there's probably three distinct use cases for that. The first is the end user, the taxpayer uses it. The second scenario is a tax advisor or CPA is trying to figure out the gains and losses for their clients. Could be a business, hedge fund, or could be an individual trader. The third instance, which is really exciting for us right now, is a government may want to know the capital gains of their tax-paying citizens so they can tax or collect or withhold the right amount of taxes for them. And so in all three of those cases, the end result, the solution, the product is the capital gains or loss report, but the use case is different depending on who the client or customer is.
Mhm. Okay. All right. So what in essence makes BlockSentry different from other crypto tax software or compliance platforms that's in the market right now?
Great question. So I love to tell you guys that we are unique in the crypto tax software space. The truth is, there are many competitors out there around the world, mostly focused in the US, that do something similar, right? And the business models are similar and the pricing is similar because we peg our pricing based on market pricing, right? I think what makes us different is a couple things. The first is we know that we are extremely accurate, right? And the reason that we know we're accurate is because unlike we believe other global software companies, crypto tax software companies, we hire local tax professionals to vet our tax calculations, right? So for our Canadian product, we hired a Canadian accounting firm to tell us of our 32, 33 different transaction types based on what we understand about the laws in Canada. You tell us if this scenario is the result is true. So we give you a worksheet, you give us back your result. We compare your worksheet to our worksheet. Our lead tax developer, who's in India, his name is Kshitij Shah, he's based in India. And then if there's a discrepancy between what they found and what we found, figure out who's right and who's wrong, right? We did that in every non-US jurisdiction. Of course, the US as well, but every non-US jurisdiction. It takes a long time. It took us between 2 and almost 5 months to stand up a new jurisdiction because it takes time to go through these calculation scenarios to figure out based on short-term gain duration, long-term gain duration. What about pooling? How's interest income handled? All those different scenarios, in developed markets, the tax laws speak to that. Or some case, there's some default position. Do you use LIFO or FIFO as a default position, let's just say, right? So all those things go into the calculation of the software. And so we hung our hat on being accurate, right? We spent a lot of time and money doing that as a competitive advantage, if you will. But the second thing I would say for the retail product is our strategy, right? And I don't say this too much in mixed company because of a lot of competitors out there, but you guys are in a circle of trust. So I'll tell you guys about this. Our key differentiator on the retail product side is our strategy, right? And what we came up with once we acquired this company was what we call enterprise distribution. The problem that we saw when we acquired the company was those original founders were trying to sell software over the internet. They were trying to sell it on social media. It was a B2C company, right? In 2017 and 18, 5% of people traded crypto. So if you run a Facebook ad, you're spending a lot of money to get to a very few number of people, right? So we thought, why not go where the crypto people are, right? And so over time, we developed what we call enterprise distribution, which is we want to be embedded on crypto platforms where we know crypto traders are. Far and away, that's the exchanges, right? By definition, every exchange account holder trades crypto, obviously, right? So we can be embedded, or a digital wallet, or a crypto debit card, any platform where there are crypto users. We want to be on that platform, making ourselves available for those users to purchase or acquire our software, right? We have a whole revenue share model, embedded technology is a whole way we do that. But the strategy is let's not be B2C, let's be B2B2C, right? Let's partner with exchanges to get access to their shelf space. I always use the analogy of bottled water. I got some bottled water right here. I don't even know what this is. I don't even know where this came from. This is Wegmans. This is a real store here called Wegmans, right? We normally have Poland Springs. Poland Springs, I've seen Dasani commercials. I've seen what's the fancy water? Smart water. I've seen a lot of bottled water commercials. I've never really seen a Poland Springs commercial. Maybe they are. I just never saw one, right? All I know is if I go to a grocery store or bodega, a ball game, pro college, Poland Springs is behind the counter normally, right? These people must be focusing on distribution. They're not focusing on brand or marketing. They want to have shelf space, right? And so we're thinking, why not use that same model? Let's just get shelf space on as many platforms as we can. That way, when the tide turns to compliance, we'll already be on the shelf ready for them to use. So long answer to your question, Champ, by saying what makes us different, we believe, is accuracy, number one, and our go-to-market strategy. That's where we're trying to compete with the retail product.
Yeah, no, that clears it up. And that's what caught me initially after our first talk and you shared some documents with me. I'm like, they're going after the right market. Right. And all that we know about the adoption and where this thing is at globally, like you're going after the correct market. So you mentioned Canada. How Canada has a lot of restrictions on what they can buy, how much they can buy. If you can disclose, what are you seeing on the tax side of regulations? Because we have some students from Canada as members. So I think that'd be good value for them.
Yeah. So we stood up our Canadian product last spring. We went live on a platform called Wealthica. So it's wealthica.ca, wealthica.com, and it's in their add-on store, right? And again, with the idea of being enterprise distribution, we want to have Wealthica users be our users, right? And so they were very helpful and cooperative in getting us on their platform. We learned a lot by embedding our software into some other platform. Canada is probably, generally speaking, on par with the US in terms of its tax sophistication, in terms of how developed their crypto tax laws and rules are. I want to say off the top of my head, they account for about 24 different transaction types. Again, don't quote me on that. I deferred that detail to Shittich, but it's less than the US, but it's not that much less than the US in terms of the number of different transaction types that their tax laws speak to. And so our software was built to accommodate with accuracy the tax laws of Canada and the US and South Africa and the UK.
Okay. So let's bring it back to the state side. There's this IRS 1099 DA form, right? What does that mean for the average crypto user in the United States?
We knew this was coming, right? And one category I would add to those three use cases I told you about, the individual user, CPA, or government, we also felt that eventually the exchanges could potentially be not just a partner, like I mentioned earlier, but also a customer, right? When and if, we thought more when than if, the exchanges become subject to the same laws as Fidelity and Schwab, right? So if anybody on the phone, on the call trades stocks and bonds traditionally, you're going to get a 1099B every year, right? The B stands for brokerage, right? So the Schwab account or Fidelity account has to give you, when you sell your stock every year, a 1099B. It tells you how much you made or lost from the sale of your stocks, and they tell the government how much you made or lost from the sale of your stocks, right? That whole model is what they did for digital assets. The 1099-DA stands for digital assets, right? And so the IRS is basically replicating the same third-party reporting and corroboration rules that exist in the brokerage world or an interest-bearing checking account, 1099 INT from your bank, or 1099 miscellaneous, or if you sell real estate, sometimes it's reportable. So it's all based on third-party corroboration. Some would call it snitching, or you can call it third-party corroboration, right? The idea is to tell the government how much you should have been reporting. You can report or not, but they know, right? And so the IRS did that same model for digital assets. And so what now is going to happen in 2025, they phased in over a couple of years. In 2025, all centralized exchanges need to report what your gains or losses were when you sell your crypto on their platform, right? So you're going to get that report in the year, just like you do from your Schwab account. Now, there's a lot of details in there around how this will work. As you all know who trade crypto, I could buy crypto on Coinbase in 2018. I can put it in my Konami wallet for safekeeping. And now the price went up by 10x. I got to sell, right? Open up a Binance account, a Bitfinex account, transfer my crypto there and sell it. Well, according to this regulation, the selling platform has to tell the IRS and me what my gain and losses were. The challenge for them is going to be, I didn't buy it on their platform. I bought it someplace else a long time ago. So how are they going to know what my gains or losses are? That's the use case I was saying earlier when I was saying we felt like at some point the exchanges are going to be a customer for this software as well, right? Because they're not going to have the capabilities unless they build them. Time is going to be very expensive, not their core business, to determine what the cost basis is on their 5-10 million users, half of whom didn't buy the Bitcoin on their platform, right? This is a big deal in the industry. They were pushing back on this for a long time for this very reason, right? They eventually lost that argument. That's why the laws are going into effect now. But they still have a problem in terms of, are they going to build it? Are they going to buy it? Are they going to acquire the software? What are they going to do? And so there's a huge opportunity there. We're not focused on that just yet, and I'll tell you why later in the call, but that is a huge opportunity that we saw coming, and sure enough, it is here now in 2025. It took a long time. This is 2018, so it took 7 years to get here, but now that regulation is finally here.
Yeah, and it's crazy because we, for a majority of the academy, we were under the Biden administration, right? Because we started 3 years ago. Champ and I both started to invest 10 years ago, so we were probably under Obama, but then they weren't saying anything back then. It was kind of the wild, wild west. I mean, we got picked off left and right. I don't have any accounting for the most part. Exchanges used to be in South America, they shut down. Exchanges used to be here, they shut down. You can barely get reporting past 3 months. on the exchanges that we deal with now. So I don't even know what my true basis is. I do have some stuff written down, but for me to get it down to the T, right? You know, at that point we had like coin tracker. There's different things that we gave our students to be able to do whatever, or really the back of the envelope was the easiest thing because we were just so used to just paper wallets. So there's this whole world of crypto that's like not documented
Right. It's
properly,
outside the scope of, yeah.
right? So we have this contrast difference between the Biden administration and now the Trump administration. So here's a twofold question for you.
Yep.
And we'll just take it one at a time. So, how has the Biden administration's approach to crypto regulations affected your business and product strategy
Yes.
prior?
Yes.
Yeah.
The key to our whole business is not the value of Bitcoin. The key driver of our business is the level of enforcement on taxation.
Okay.
Right? The more enforcement of taxation there is in any given country, that will be the driver of the business, the driver of demand for our software, right? That's why we picked the countries that we picked, right? We picked the US, we picked Canada, we picked South Africa, we picked the UK, as opposed to Mexico, as opposed to Nigeria even, because at that time, even to this day, really, but certainly 4 or 5 years ago, those were the most tax-focused jurisdictions in the world. Now, Korea and Japan were also very, 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 even more so than the US actually, right? The problem there was language and time zone, right? We did not want to be in the business of trying to do business in Tokyo, right? You don't speak the language, you got to have your code, you got to have your interface, the customer service. We didn't want to deal with that, but we knew that South Korea and Japan were probably more stringent on taxes even the US was in 2019, 2021, right? And so to answer your question, Steve, the Biden administration helped drive the demand for software like ours by making crypto tax enforcement a focus. Now, their hand was kind of forced, if you remember, and you remember this, everybody remembers this, right? Because everybody's money, oh, is it a commodity? Is it a security? Whose jurisdiction is going to be? They're going back and forth, right? Kind of da-da-da. And then FTX happened. Whoa. People lost a lot of money. People got embarrassed. This is a problem, right? And so now it really sort of fast-tracked regulation. Focused most on investor protection first. It really wasn't taxes, right? It was investor protection. But once you start having a huge amount of investor protection compliance, you got to pay for it, right? That's where taxes come in. So taxes kind of lagged the enforcement that the Biden administration started to do, and they ramped it up completely as a result of FTX debacle, right?
Okay. Now that we have this administration here, where are we with the movements in that
Yes.
space? I mean, he's saying no taxes on American made
Yeah.
crypto
Yeah.
companies, and
Trump is a crypto bro, right? He'll tell you that. He said it. He's I'm a crypto bro, right? You know what I mean? Nobody pays taxes. I'm with them. They with me. I'm with them, right? So no taxes, right? One of the first things he did, well, and again, I don't want to get into weeds in this. If you guys, I don't want to bore you guys, but inside that regulation of 1099-DA, it was part of the infrastructure bill, and they made all exchanges, centralized and decentralized, defined as a broker, right? And any broker had to report this 1099. Well, the DeFi guys are like, oh, we're not a platform. We're just code. We're just front end. Like we can't be subject to, and they kind of pushed back, right? Biden didn't care, right? His administration pushed forward, had him part of that net. I want to say it was the week of March 26th. I'm pretty sure it's the last week of March. The Senate voted something like 70 to 28 to repeal the definition of a centralized platform, decentralized exchange as a broker. So they let them off the hook, right? And that's gonna, I think it's the right thing to do, honestly. And that'll relieve some of the pressure that they have on that side of the crypto ecosystem. Generally speaking, again, that should help asset prices, but we don't care about asset prices per se. we care about enforcement to drive people to need to comply with a reporting requirement and using our software to do it. So we need BlockSentry, we need compliance. We don't really care that Bitcoin's up, what, 2.5 times in 2024? Like major run, right? That's great for asset holders. We need people to enforce taxes based on that gain. And when we see that around the world, which we are seeing that in parts of the world, that's what drives demand for us. And so we're sort of this is the thing we thought about early days is we're part of the ecosystem, but we're really on the compliance side of the ecosystem, right? And so how do we position ourselves as being part of the ecosystem and want to help adoption and all those types of things, but we're really on the enforcement side, right? And so that's really an answer to your question, Steve, is Trump is not, it's not clear to us how strict enforcement he will have because he's got an IRS, right? Like he's making it hard. Like, so that's all that screams less enforcement, which means people say, they won't get to me for 5 years, right? If the staff goes in half, how are they going to catch little old me, right? I may take a chance, but I don't have a chance of an audit, that kind of thing, right? And so it could be a net negative. We don't really know yet. It's only been 100 and some odd days, but early on, negative regulation is bad for our business.
Okay. So we're everywhere in crypto, you know, the regulated, the centralized, the decentralized, not the regulated. So when you look at a company like MetaMask, right, when we're buying peer to peer, how do you see these guys coming in under the enforcement, or is this going to be a wild, wild west, Mt. Gox type of situation, dark web?
Yeah. We think about this all the time, right? Like, I think I'll answer the question this way. I think, this is not my opinion, I think it's proven itself to be true, right? That too much regulation is bad, full stop, right? You can't get anything done. It's red tape, it's expensive, agreed, right? But when you have some amount of regulation, that is supposed to mean investor or consumer protection. And when people feel safe, they transact, right? And we've seen that with crypto, right? When you let Grayscale or these ETFs come into the market, they move a lot of money, right? Yeah, individual people can have $110,000, but Blackstone, they can move a lot, or the Treasury, they can buy a lot of Bitcoin, right? And so they're only going to do that if they feel like they're not going to get scammed, right? And so generally speaking, not even just crypto type software, I think generally speaking, some amount of regulation is good, just enough to get people to feel safe, to fly, to buy crypto, to buy food, to use whatever, you know what I mean? Like whatever it is, right? And so for blockchain and crypto, generally speaking, I think that some regulation is good. So somewhere between Biden and Trump is where we need to land, right? In terms of the industry. Again, it's beyond crypto, of course. It's all kinds of blockchain and smart contracts and how do you do financial regulations and fintech. It's bigger than just the crypto. But my answer to your question, Steve, is I think that under Trump, it feels like it's gonna be a lot of the Wild Wild West, right? And that is a net negative in financial markets because people get scared, and people get scared, hold on to their money. And we need people to trade for this whole thing to go up in asset value.
That's a great point.
Yeah.
All right. So we know you shared with me some of the stuff going on in Africa with BlockSentry. Are international governments ahead or behind the US in terms of crypto tax clarity and enforcement?
They are, well, let me qualify this. The emerging markets that we looked at, again, I think Japan and South Korea and Singapore could be on par or even ahead in some cases. But the emerging markets that we looked at in Asia and in Africa in particular, they are way behind. I'm talking light years behind. Their tax code is that we've seen, it's just taking existing definitions of assets and applying it to crypto, right? So you have 15% capital gains on any capital asset, same thing for crypto. That's it. Well, what about long-term and short-term? Up, one flat. Well, what about some transfer or interest income? Up, just flat. What about mining income? What about no? They haven't thought that far ahead to parse the crypto tax regulations the way the U.S. and Canada and South Africa has. They're just now putting on some sort of flat tax on capital gains on crypto, which is the same rate they have on everything else, right? And so in some ways, that makes it easier for us to stand up our government services solution. But we know over time it's going to have to become more refined because one size doesn't fit all in crypto, of course, right? But to answer your question, they are light years behind. I'm at least 5 years, at least 5 years, I would say, generously 5 years.
Are you seeing liquidity moving through those exchanges in those markets?
Oh my goodness. So that's the other thing, right? Like, so we started to study this, and we didn't start studying emerging markets like this until last summer, right? We were focused on developed markets, like I said earlier, right? But we started looking at emerging markets for a sort of a different reason. We started with Asia, we started with the Philippines, right? That's the first emerging market that we looked at. We looked at the Philippines because we were talking with a firm called Commonics. Our advisory board member is a board member of a firm called Commonics. Commonics is the biggest vendor for USAID, right? And so her name is Lori Jordan, right? A Black woman, very smart. And so she tells us, Commodities could be interested in you guys as a strategic investment, but you got to do more than just make money. You got to do good and do well, right? They care about the USAID, right? They care about helping people, right? So figure out a way to make it sort of, interesting from that standpoint. So we thought about it, and we came up with this whole idea of government services around taxes, right? We thought about employment and all that different impacts, and we settled on taxes, right? Because these countries are poor. They rely on foreign aid to make up things the government can't provide. But if you look at the data, there's a big gambling culture in Asia, right? So these dudes gamble a lot of money, right? Everybody knows Macau and these places. If you look at the Philippines, there's actually a New York Times article from last November, how much Bitcoin was traded in the Philippines. Philippines may have I'm going to butcher these numbers, but this is directionally correct. Something like a third of the kids have stunted growth. Only 40% of the people have bank accounts. Like, it's a poor country, right? But there's probably 20 billion. Well, no, 20 billion is a lot. Maybe $4 or $5 billion of crypto wealth in the Philippines, right? According to Chainalysis, right? Like, it's an outsized assets because they're speculating, right? And so the government has a 20% statutory tax rate on crypto. They're collecting zero. They have no capability to do this, right? And so we started looking at the Philippines first and what the impact of additional tax collection could do for their country, how you can provide services and clean water, educate the kids and healthcare and all those things they want to do anyway, but they don't have the resources to do it, right? And then when we start looking at that, I thought, being who I am, what about Africa, right? And when I looked at Africa, my goodness, Steve, it was like Nigeria expects to have, as the biggest example, $60 billion of crypto Bitcoin inflows or transactions in the country this year. 25 million people in Nigeria alone are going to trade crypto at a value of $60 billion with a B. I fell on my seat. Like, is that number right? Like, compared to GDP, and then it kind of it passes the sanity check, right? This is a real number, right? And so, and the thing that drives that, to get to your essence of your question, is all the problems in those countries, geopolitical instability, high rates of inflation. So you got to remit money back home, right? How are you going to get it back home to your mom or your sister or your grandmother, right? And so it's a perfect storm, right? Where the adoption rates are going through the roof, and the drivers of that use case is beyond simply investing, right? I think 40% of that 60 billion is stable coins. So now they're not actually speculating. They're trading money. They're buying goods to import, right? That's how they're selling their accounts because they can't get their hands on dollars. So you start looking around the world, I'm like, our eyes just the wheels started to turn and we just jumped in and every day was a new revelation and that's how we got to the thing that we can tell you more about our African strategy. But to answer your question, money flows are incredibly high in emerging markets, particularly in Africa.
Listen, I tried to tell the academy. I'm like, there was a time where there were some Africans that I didn't know was reaching out to me on social media, like, hey, we need access to stable coins. We'll pay you X amount over. And I'm like, wait a minute. That sounds great, but I wanted to know why. And then they started to school me on the just their inflation levels. Then I start working with, some of our web developers and things coming out of Africa and the same situation. I'm paying them in crypto. And they're showing me how it's exchanging out and cost of living. And I'm like, if Americans can actually wrap their head around this inflation situation, they'll start to understand that this particular asset, again, this is not for investment advice. I'm just telling you how this thing is being used from people who have zero financial literacy, right? We could agree that these countries aren't like teaching them this situation. They are making something out of nothing and they're utilizing cryptocurrency to offset triple digit inflation. When you thought you fell out your seat, I'm like, you got to be kidding me. And I'm first generation Haitian American, so I understand the inflation part. But as a younger child going there in the summer, you don't know what a $20 box of cereal is. You don't know how excessive it is because I don't buy cereal as a kid. And it's like this stuff was happening 30, 40 years ago to these countries. So, we're caught up in so much privilege, right? That you almost ignore that this privilege is on the backs of other people.
Right.
So once I uncovered that, I was just more like, this system's bullshit. Like, I don't want to be a part of this. And then that's what drew me to crypto even more because it was more of a just saw an interview the other day and a lady mentioned, I'm just going to the people's bank at this point now. And that's how I'm looking to move up until like I'm just done doing commerce, fiat exchange, right? And when I say the people's bank, meaning, guys, everything we need is here, right? Even if we were going to deal in traditional, and you come from the capital raise world, and you understand that when you're sitting in front of these guys, they're not looking to really give you the best deal for you, right? Hence bringing him on because there's an opportunity here for all of us to get with the people's bank, get in position where normally these type of situations don't flow across our desk because of the minimums, because of the accredited investor status that you need. It's like we're totally closed off to the financial space in this country and just globally. And it's just unfair because it's like everyone should have access. You want to assume the risk? They letting us gamble all day. Nothing dumber than that.
Yep.
Right.
If I could jump in on that real quick, that's exactly the thing that I got so many issues with the U.S. financial system and all that stuff. But that's one of the things that you just hit the nail on the head, right? I watch ESPN like everybody else's playoffs, right? Gambling commercials, and a little tag, if you have a gambling problem, dial 1-800, blah, blah, blah. But the reason, ostensibly, why you can't do investment in private securities for your own protection. Right? We need to protect you from those guys, protect you from your own ignorance, right? You don't know. This is a sophisticated thing. And so if you don't have if you don't have this much assets, no matter how you got it, you could inherit it. You could be a construction worker who inherited $5 million. You're not any, right? As opposed to educated college person who's working. No. You're not sophisticated. So we got to protect you against these. Meanwhile, these guys are making, I just said, 2x on their money, right? But you want to protect me, right? Little old me or my aunt from a 2x return. That's your protection, right? Now it's come on, man. Like, I mean, I finance Chicago, the whole thing. I get it. The Great Depression, I know where the rules came from, but it's been perverted over time. You know what I mean?
Yeah.
Like it's been perverted over time, right?
Grossly. Yeah.
And I mean, we don't have informed decisions on a lot of things in this world, right? Not even our own health. So like we live in an information age, the same way that we research these projects, the same way that we, can be involved in trading stocks through a cell phone. These rules and regulations have to evolve with just where we're at in society today.
Yeah.
You know,
Agree, agree,
this is
agree.
we are self-teaching and becoming masters of spaces that they normally wouldn't allow us in, you know.
One of the things I'm gonna follow you down this rabbit hole because I could
Mm,
not agree. This is what got me involved. This
mm,
is where what got me on the hook for this whole space, right? I would love to see a comparison. So in private equity, they keep track of these different metrics. In real estate too. Donnie knows this in real estate, commercial real estate space. But there's metrics, and they read different things that will track asset prices and asset performance of asset managers in real estate, in public stocks, and bonds, and private equity, right? In venture capital. So I don't know if it's pre-quant or venture economics would track the quartile performance of venture capital funds, right? We know who the best performing managers are, right? So one of the things I always say I wish we could do is let's track the performance of Silicon Valley. Who the guys who turned Trump? Uh, oh shoot, they did a podcast. I forget the well-known venture capital guys. So I'd rather see how did they perform in this window of time versus crowd-funded ventures,
mm,
right? Do they really outperform a crowd-funded venture versus one that they created in that round A, round B, round C in these club deals? I suspect that the performance is similar. I don't discount um, the knowledge of those people, but I also know that some entrepreneurs don't want to fund through those sources. So it's not just the access of the deal flow because some entrepreneurs don't want any parts of those guys, right? Right?
hmm
They charge a lot of money for their capital, right? It's expensive financing. So I've always felt like, man, I wish there was a way to compare. Because again, this whole idea about protection, like some people are just doing some Reg CF stuff, and these 10 deals were crowdfunded, and these 10 deals came out of Sand Hill Road. Let's look at the performance. And I have a high degree of confidence there won't be that big of a delta. It certainly won't justify the fees they're charging. That's no doubt in my mind that that's the case, right?
Right.
So anyway, so sorry to go, but
Sounds like
I'm passionate
another
about this thing.
sounds like another software company.
Right.
All right.
Exactly,
So
exactly.
listen, let's get to the meat and potatoes. What is how are you making money with this? Like how where's the money?
Yeah. So can I share my screen to show you
100%.
guys? All right. So if you let me share my screen, champ, I will pull up a deck to show you the business model.
You should be good to go now.
Um, Can you guys see BlockSentry?
Yep.
It says February 2025. That the one you see?
Yep.
Okay, great. So I'll skip over all of this stuff. This is just the deck that we prepared. We prepared this deck for Kenya. And we have a similar deck for every country. We kind of tailor it to the jurisdiction.
Mhm.
I already told you about the 4 use cases for our software. This is for Kenya. This is slightly interesting. I'll take 1 minute on this. So every Steve asked a question about how are different countries comparing to the U.S. in terms of its sophistication around regulation. So Kenya and Tanzania have an interesting model where they're charging a straight transaction fee trying to get at collecting taxes, right? So my example earlier, I bought crypto on Coinbase, I transferred it to my Konami wallet and went back to Binance to sell it. They're charging 3% on the transfer from your own Coinbase account to Konami, and the Konami back to Binance 3% each way. You didn't sell it, you simply transferred it from your own account. It's hugely punitive, and people up in arms about this, right? We actually joining the Kenyan VACC, the Virtual Asset Chamber of Commerce. They're lobbying against this rule, right? And we're definitely with them on this. We want them to adopt a better model, which could have a use case for our software. So again, this is just one example how countries are trying to get their arms around taxing crypto. This is Nigerian model. We have a imminent deal in Nigeria. I won't go through this because it's sort of time consuming. Here's the US model we just talked about, where the filers are going to have to Exchange have to report a 1099-DA form. The exchanges report to the IRS. They also report to their end users. And you can file or not once you get it. If not, they'll know how much you should have paid. And so, and then we have the model that we want to propose to every government, which is very similar to the one that we did for Nigeria. This is our schematic. So this is the visual representation of the model. In a nutshell, the government services model is what they call in Africa a revenue assurance solution that we're providing. It's kind of like an audit, but not an audit in the traditional Western US sense of the word, right? So for industries like oil and gas, for telecom, the government doesn't have the resources to verify the basis on which the regulatory fees are charged. So they hire a third-party company to do that for them. So if you're getting some royalties on oil and gas production, how do you know how much oil and gas was produced, right? Somebody has to go out and verify that for you, right? Or telecom services, data usage, number of uses, cell tower pings, whatever they charge, right? Somebody has to verify that, right? And so rather than the tax authority doing that, they hire a third-party company to do it, right? So all we're doing is providing that same service for crypto, right? How we do it, this is a visual how that would work for us. Basically, we're an information provider. So we're going to get partial taxpayer ID information, all API sales data. We're going to filter out all Kenyan taxpayers from Binance, let's just say, look at their gross sales number and figure out what that withholding tax should be. We're going to, the custodial bank is going to receive the actual funds from the exchanges in local currency. We're going to compare what the custodial bank received against what we felt like they should have received. And there's going to be some reconciliation report that we provide to the client every day, every 3 days, every week, right? Meanwhile, the custodial bank who collected the actual currency are going to send the net amount to the government, keep their bank service fee, and send us our service fee, right? So what we're charging is a percentage of the revenue that we verify the exchanges should be withholding. That's our government services business model. What about the money? I'm glad you asked. So this is Kenya. Kenya is a much smaller country than Nigeria in population and Bitcoin wealth, but $8 billion, again, according to Chainalysis, is what they're trading in Bitcoin. So for 2025, this current year, if they withheld 3% of the expected transaction value on their Bitcoin, we hit some rows here because our partner said keep it simple for the KRA, the government official. So we took out some assumptions. What this is assuming is a 20% gain on this $8 billion and 30% realization. That's what's assuming here, but that's what's not shown. Okay. So you assume 30% of people are going to sell for a 20% gain. Like that's what we're saying, right? So if you were to withhold 3% of those capital gains, you get $43 million of revenue, and we propose to charge 10%. We got that fee from the current telecom services contract in Nigeria. They're charging 9% on a 15-year contract. Beautiful, right? So we think, okay, we can get 10. We're high value servicing them. They may have negotiated us back down to 7, but we'll take it, right? And so when you run the numbers, simple math, we will collect on a gross basis revenue, not profit, 10% of the expected withholding gains from those crypto transactions collectively for the entire population of Kenya. And we have revenue models for Ghana, for Benin, for Nigeria, for Ethiopia, and even Uganda. I think we looked at Uganda also.
Wow.
Let's go.
This is crazy. This is the money. He definitely ate that one.
So you gave me access to these projections, right? My question to you is, am I able to share what you gave me within the academy? We'll have our own private talks, or do we have you come back on again for a private talk with
Yes. So I will feel slightly more comfortable with a private talk.
Yeah.
And then once I know who the interested people are and I can know who their profile is, then I'm happy to kind of circulate in a smaller circle of people. Again, our only advantage here is our strategy and now our relationships,
Right.
right? I'm happy that the 1099 DA didn't get repealed completely because a lot of our US competitors are starting to build their software around that solution I told you about earlier. They're trying to partner with exchanges to be the service provider for the exchanges to give a 1099 DA form to all their users, right? If you think about it, if you're a Coinbase, 30 million users, say 20 million in the US, if you charge $2 per form per user, that's a lot of money, right? So we thought about going after that business, right? Until we stumbled on this Africa opportunity, right? So we want them to fight over the US 1099 DA market while we build and hopefully dominate the continent of Africa. And by the time they even think about emerging markets, we want to be the dominant player, at least in Africa, if not Africa and Asia, right? So I say that to say that our strategy is the biggest advantage, and it's replicable, right? Which is why I kind of want to keep a smaller circle of who sees this.
All right. So lastly, what impact or legacy do you hope to leave, not just with BlockSentry, but with just your contribution to the broader crypto ecosystem? Like, what's this why situation for you?
Yeah. I watch a lot of podcasts, and I try to look at podcasts of people that inspired me, right? Controversial figure, watch a lot of Dame Dash content, right? Dame's a polarizing figure, I understand, right? If you can weave past his personality, get to what he's saying, I like him a lot, right? Irv Gotti, rest his soul, same thing. Colorful guy, he's a genius, right? Ryan Leslie, little known guy,
Oh,
right? Technologist, right? You know what I'm talking about, champ, right? Yeah. Music producer. He's a technologist, right? Kind of like Nas. Like he's a music guy, but he kind of turned technology and he's killing the game, right? Yeah, actually, he looked at us closely. Had a call with him a couple years ago. So I saw him on the podcast, same thing, right? And what Ryan was saying was, as a culture, we cannot miss this technology revolution. We can't do it, right? Right. It would be hugely catastrophic for us to be a victim of AI, a victim of blockchain versus participating. We can't do it, right?
Right.
So to answer your question, Steve, and I think about those guys, other guys too, but those particular and Reginald Lewis, which is a name many you may not know, Harvard dude, took down the first black man to take down $1 billion company, Beatrice, back in the 80s, right? And he wrote a book. Why should the white guys have all the fun? You know what I'm saying, right? Right. And I thought about that a lot in this whole process. And for me, if we can build a company that is black owned. Most people on our cap table are black, right? Africans or African Americans, right? The legacy people at Tax Token were all out of JMU, but everybody who came in with us in 2019 and mostly later, not all, but mostly later, are people of color, right? So if we can have a majority black owned company doing business in Africa, bringing in the technologists to build something that's based on sort of a SaaS model in crypto, that would be a fantastic legacy, right? And make a few dollars along the way, of course, right? Kids got to go to school, right? They got to eat, you know what I'm saying,
Right.
right? Grow out of shoes every 6 months. Our kids are 14 and 15.
Right.
Every 6 months, new shoes. Like the feet just keep growing, right? But in all seriousness, though, I think that's really what I would say is to have us participate. Like I tell our kids, I refuse to have them only see themselves as consumers of things. Like it just, no, we're not doing that. Like you can produce something. You can't produce everything that you consume, but you can produce something, right? So let's think of yourself as a producer in one area of your life, right? And everything else you can consume, your shoes, your clothes, your food, but you're going to produce something. Figure out what that is as soon as possible, and we'll try to get behind you on that, right? So for me, this is our chance to be a producer of something, right? Not just a consumer of everything. I'm not doing it. If I'm down any hill, I'm down on that hill, Steve. Straight like that. Straight like that.
You line up with everything we embody at this academy here. And we're very selective on who we bring on. Right? There's guys that come at us and I'm just like, I know the angle. Thank you for your time. Um, just an incredible product that you're working on right now, in an incredible space. So guys, there's a couple things that jump out at me. Investing in emerging markets, right? There's blood in the water in America. You can swim with these sharks if you want, but you kind of know it's on borrowed time here. Okay. And this is from a seasoned individual, ranks through Wall Street and just the whole financial thing. Champ and I come with zero credentials in financial literacy, which is what makes us look at things a little bit closer than if we thought we knew everything. Right. So yeah, you just embody everything the Academy just stands for. You have an amazing business, an amazing vertical. Any sort of way that we can support it, we will. Right, opening up our channels to you. We're gonna put together the small group situation within a week. So I already know the parameters and everything. So I'll have that all set before we come on for that next call. So guys, listen, the opportunities here. And I think what drew me the most to your product was the immense amount of information that you have, the due diligence that you and your team have put together, not just here in the States, just globally, guys. So, when you don't think that there's certain doors open, I'm telling you that this international market, these emerging markets are primed for, I mean, you could sell ice in some of these countries and make a couple $1 million a year. Just transporting from A to B. They lack infrastructure. They lack structure. They don't lack capital, right? I could tell you that. And right now, when you start to see these countries closing off, their borders to certain people, it's kind of ball game now, guys. And they're asking us to come back. And I'm not saying, originally where we're from, just start to look at emerging markets more. Because where would your business be if you only relied on the American market and guys chasing this document for $2 or whatever the case is? It's a big number, but how simple is that? And who's the opportunity to go to at this point? We kind of know who the players are in America. And then, yeah, you'll probably open it up to every banking institution is going to be an exchange in the near future anyway. But if there was one thing that jumped out at me when I saw that deck, it was that emerging market piece. That did it for me.
Yeah.
Nothing else.
I can tell you, I was stunned, right? So when I first, again, back to Laura, she planted the seed. We started looking around. Me and Marvin, we called every person of any African heritage that we knew. We went to school with them. Our kids went to school with them. We met them in a bar, whatever, right? Who do we know, right? Who has some contact in the government and wherever, right? That's why I meet all these people, right? And they're all entrepreneurs, right? And I'm hearing the most incredible returns for, like, one guy was telling me he imports coffee from Ethiopia to the US, but he wants to import sugar into Djibouti, right? He's telling me the margins that you're getting for importing sugar. I'm like, I'm a finance guy. Help me understand how you can make 50% net margins importing a commodity. That doesn't make sense. Like, that's the opposite of what I learned, in school. You know what I mean? How is that? He said, I'm telling you, forget what you've learned when it comes to Africa, right? Put aside all that stuff. Most of it won't apply here. And for the sugar thing and other things I'm learning, is the reason why that persists is because there's no one big offtake partner in Africa, right? Whoever's importing bananas from Brazil into America, there's a handful of importers importing bananas, and Whole Foods, Albertsons buy from them. So if you're a banana producer, you have a guaranteed offtake partner. That means you can get a letter of credit. Now all the wheels turn. In Africa, there's no one big offtake partner. He said guys are pulling up in trucks, in vans, buying 10, 15, 30, 40, 50, 100 pounds of sugar, driving back 3 hours, selling their local markets. So you have this hugely fragmented market, which explains why if you have the money to move that much sugar, I'm talking about a container, like metric tons of sugar, you take spot market risk. But if you can do that, that's why it happens, right? I'm like, that can't be. I'm saying, you got to come with me. Come, you don't believe, I know you don't believe it. I hear it in your voice. You're saying it to me. Come with me. Come in for a week. You can see, I take you to the port. You can see what happens. It's rice, it's frozen chicken, it's sugar, it's beer, it's almost anything because there's a huge consumer demand for a lot of this stuff, and there is not much domestic production, incredibly, right? Tomato paste, I'm hearing the most bizarre things. So anyway, not to be the death, Steve. Yes, I was not thinking about emerging markets again. This is what I'm sharing with you is new for us as of August. I was not thinking about Asia or Africa until August. We met Lori. That's when I started thinking about this. Before then, US, Canada, Australia, like how are we going to penetrate competitors, everything you're saying. And I'm like, man, this it's been there the whole time, right? So open your mind, reduce your bias, and opportunities are going to be there. And that's the message that I'm sort of sharing with people who will listen.
Man, absolutely incredible, man. I thank you so much for sharing that with us. I appreciate you being here with us, giving us so much game and insight. Listen, everybody out there, tonight, you guys got a front row seat to the future of crypto regulation and a clear view of how taxation is becoming a global standard in this digital economy. So, BlockSentry is more than just software, it's a strategic advantage because in this new era, what you don't report can cost you. But when you understand the rules and the tools, you can move smart, stay compliant, and protect your gains with clarity, not fear. Regulation is coming, whether we like it or not. But knowledge puts you all in control. So stay sharp, stay informed, and remember, Skyton Academy is your unfair advantage in this rapidly changing financial world. This is the standard. This is the energy that we bring inside the academy every time. So if you guys are ready to level up and you're looking for a home, the link to join Skyton Academy is below in the description, and we welcome you guys with open arms. Des, thank you again. We greatly appreciate you for being here with us.
Thank you, champ. Thank you, Steve. Thanks, everybody.
All right. Thank you. You have a great night. Thank you again.
Okay, you're welcome. Thank you.
It's nice, nice.
My
Guys,
guy.
it's wow. Great outro, champ.
Appreciate
Great
you.
outro. All right, you can clip YouTube.